Picture this. You wake up, check your phone, and your heart sinks. Bitcoin just crashed below $114,000. Your portfolio's bleeding red, and that sinking feeling in your gut screams, "Sell everything!" The news is screaming panic. Your friends are texting you about the end of crypto, and you're wondering if you've made a massive mistake. But hold on, before you hit that sell button, let me make you a promise. In the next 10 minutes, I'm going to show you why this Bitcoin dip is not the disaster you think it is. It's actually a golden opportunity, if you know how to avoid the trap. My name's Domini, and I've helped thousands of investors like you navigate these wild markets with confidence. Stick with me, and by the end of this video, you'll see this crash through a new lens, one that could change your financial future. Let's dive in. Let's be real. Market crashes feel like getting punched in the stomach. Bitcoin dropping below $114,000 isn't just a number on a screen. It's your hard-earned money, your dreams of financial freedom, maybe even your plan to retire early or buy that house for your family. Right now, you might be thinking, I should have sold at $120,000. Or, is this the end of Bitcoin? I get it. I've been there, staring at a screen full of red, feeling like the world's collapsing. But here's the truth. Every single market crash in history, whether it's Bitcoin, stocks, or real estate, has one thing in common. It's not the end, it's a test. A test of your patience, your strategy, and your belief in what's possible. Think of it like a stormy sea. The waves look terrifying, but the strongest ships don't turn back, they sail through. And today, I'm going to show you how to be that ship, not the one that sinks in panic. Imagine you're a farmer, and Bitcoin is your prize crop. You've spent months tending it, watching it grow, dreaming of the harvest. Then, a sudden frost hits. The crops look wilted, and your neighbors are ripping theirs out of the ground, convinced it's over. But you know something they don't. Frosts pass. The strongest roots survive, and the harvest comes bigger than ever. Bitcoin's dip below $114,000? That's your frost. The question is, are you going to rip out your crop, or are you going to trust the roots you've planted? Let's talk about why this dip is not the end, but a chance to plant even deeper. Here's the trap most investors fall into when Bitcoin crashes. They sell at the bottom. It's human nature. When you see your portfolio drop 10%, 20%, or more, fear takes over. Your brain screams, protect what's left. But selling now is like abandoning that farm right before the frost melts. Let's look at history to prove it. Back in 2017, Bitcoin crashed from $20,000 to $3,200 in a year. People called it dead. Social media was full of "I told you so" posts. But those who held on, they saw Bitcoin rocket to $69,000 by 2021. And when it dipped again in 2022 to $16,000. The same story, panic, fear, selling at a loss. Yet here we are in 2025, with Bitcoin having hit highs above $120,000 just weeks ago. The pattern is clear. Crashes are temporary, but regret is permanent. Why does this happen? It's what I call the fear cycle. Step 1. The market dips. Step 2. The media amplifies the panic with headlines like, "Bitcoin's done." Step 3. You check your portfolio, see the red, and your emotions take the wheel. Step 4. You sell, locking in your losses. And Step 5. The market recovers, and you're left kicking yourself for not holding on. The trap isn't the dip, it's letting fear make your decisions. As Warren Buffett once said, be fearful when others are greedy, and greedy when others are fearful. Right now, the world is fearful. That's your signal to get smart, not scared. So, why is Bitcoin's drop below $114,000 a golden opportunity? Let's break it down with 3 practical reasons. First, fundamentals. Bitcoin's value isn't just hype. It's built on a fixed supply of 21 million coins, a decentralized network, and growing adoption. Companies like MicroStrategy and Tesla hold billions in Bitcoin. Countries like El Salvador use it as legal tender. The fundamentals haven't changed just because the price dipped. It's like buying a house in a great neighborhood during a temporary market slump. The value's still there, and it's going to grow. Second, market cycles. Bitcoin moves in waves, and we're in a classic correction phase. Look at the data. Every Bitcoin halving, 2012, 2016, 2020, has been followed by a massive bull run, then a correction, then another run. The 2024 having just happened, and we're in that correction phase now. Historically, these dips are when smart investors buy, not sell. Think of it like Black Friday for Bitcoin. The price is on sale, but only for those who act before the crowd rushes back in. Third, psychology. Right now, the market is emotional, but you don't have to be. Imagine you're at an auction, and everyone's panicking, selling their rare paintings for pennies. That's when the smart bidder steps in, snagging masterpieces at a discount. Bitcoin at $114,000 isn't cheap, but it's a discount compared to its potential. Analysts like Kathy would predict Bitcoin could hit $500,000 by 2030, based on its growing role as a store of value. If you believe in that future, this dip is your chance to own a bigger piece of it. Let's make this real with an example. Meet Sarah, a 35-year-old teacher from Texas. In 2020, she invested $5,000 in Bitcoin at $10,000 per coin. When it crashed to $3,200 in 2018, she panicked but held on, thanks to advice from a mentor. By 2021, her $5,000 was worth $34,500. Today, even with this dip, her investment is worth over $57,000. Sarah's not a Wall Street guru, she's just someone who didn't fall for the trap. You can be Sarah, too. The question is, will you trust the long game or let fear steal your harvest? Alright, let's get practical. Here are 3 steps to navigate this Bitcoin dip like a pro. Step 1. Zoom out. Don't check your portfolio every hour. It'll drive you crazy. Look at the big picture. Bitcoin's up over 1,000% in the last 5 years. This dip is a blip in that story. Set a reminder to check your investments once a month, not once a minute. Step 2. Dollar cost averaging. Instead of dumping all your money in at once, invest a fixed amount every week or month. For example, put $100 into Bitcoin every Friday, no matter the price. Over time, this averages out your cost and reduces risk. It's like planting seeds throughout the season, not just before a frost. Step 3. Diversify, but don't abandon. Bitcoin's exciting, but it shouldn't be your only investment. Spread your money across stocks, real estate, or even stablecoins if you want less volatility. Think of your portfolio like a balanced meal. Bitcoin's the spicy main course, but you need some veggies and protein to stay healthy. For example, if you have $10,000 to invest, maybe put $3,000 in Bitcoin, $5,000 in an S&P 500 ETF, and $2,000 in a savings account for emergencies. This way, a Bitcoin dip doesn't ruin your appetite. Here's a powerful quote to anchor this. "The stock market is a device for transferring money from the impatient to the patient," said Warren Buffett. Bitcoin's no different. Patience isn't just waiting, it's trusting the process, sticking to your plan, and not letting fear derail you. You're not just investing in Bitcoin, you're investing in your future self, the one who's financially free, living life on your terms. Let's get personal for a moment. Why are you investing? Maybe it's for your kid's college fund, a dream vacation, or just the freedom to quit a job you hate. Whatever it is, that dream is bigger than a $114,000 Bitcoin dip. When I started investing, I was a broke college kid, scraping by on ramen and dreams. Every dip felt like a personal failure. But I learned that wealth isn't built in a day. It's built through storms, through doubt, through moments like this. You're not just buying Bitcoin. You're buying a vision of yourself that's stronger, wiser, and free. Don't let a temporary frost kill that vision. You're worth more than that. Your dreams are worth more than that. So, here's what I want you to do right now. First, take a deep breath and promise yourself you won't make decisions out of fear. Second, write down why you're investing. What's your big why? Keep that note where you can see it every day. Third, take one small action today. Whether it's setting up a dollar cost averaging plan, researching Bitcoin's fundamentals, or just hitting the like button to stay connected to this channel for more insights. You don't need to be a millionaire to start building wealth. You just need to start. If this video helped you see this crash differently, subscribe and turn on notifications. We're in this together, and I'm here to help you navigate every storm. Comment below, what's your big why for investing? Let's keep this community growing, and let's build your financial future, one smart move at a time. I'll see you in the next video.